Life is full of surprises. Not all of them are good. That's where an emergency fund comes in. An emergency fund is money set aside for unexpected events. This could be a job loss, medical bills, or car repairs. It's your safety net. Having an emergency fund gives you peace of mind. You won't panic when unexpected expenses pop up. You'll be able to handle them without going into debt. That's financial peace. Everyone needs an emergency fund. It doesn't matter how much you make. It's about being prepared. It's about taking control of your finances. Start building your emergency fund today. You'll thank yourself later. How much should be in your emergency fund? This is a crucial question that everyone should consider, regardless of their financial situation. An emergency fund acts as a financial buffer that can keep you afloat in times of unexpected financial distress. A good rule of thumb is to have 3 to 6 months of living expenses saved up. This range provides a comfortable cushion to cover various unforeseen circumstances such as sudden job loss, medical emergencies, or urgent home repairs. This will cover you if you lose your job or face a major unexpected expense. Imagine the peace of mind knowing that you have a financial safety net to fall back on during tough times. It can make a significant difference in how you handle stress and uncertainty. To determine your monthly expenses, track your spending for a month. This means diligently recording every dollar you spend, from your rent or mortgage payment to your daily coffee. Use tools like budgeting apps or a simple notebook to keep track. Include everything: rent, groceries, utilities, transportation, and entertainment. Don't forget to account for irregular expenses, such as annual insurance premiums or holiday gifts. The more accurate you're tracking, the better prepared you'll be. Once you know your monthly expenses, multiply that number by 3 to 6. This will give you a target range for your emergency fund. For instance, if your monthly expenses are $2,000, your emergency fund should be between $6,000 and $12,000. For example, if your monthly expenses are $2,000, your emergency fund should be between $6,000 and $12,000. This range ensures that you have enough to cover several months of expenses without income. This may seem like a lot of money, but remember, it's your safety net. It's worth it. Having this fund can prevent you from going into debt or having to make drastic lifestyle changes in an emergency. Don't get discouraged if it takes time to save this amount. Every little bit helps. Start small and gradually build up your fund. Consistency is key, and over time, your savings will grow. The important thing is to start saving today. Even if you can only set aside a small amount each month, it's better than nothing. The sooner you start, the sooner you'll reach your goal. Remember, your future self will thank you for the financial security you're building now. Saving money takes discipline. It's easy to say you'll save what's left over at the end of the month, but there's rarely anything left. That's why you need to automate your savings. Set up an automatic transfer from your checking account to your savings account each month. Treat this transfer like a bill. You wouldn't skip paying your rent or your electricity bill, would you? Your emergency fund is just as important. Even if you can only afford to save a small amount each month, automate it. You'll be surprised how quickly it adds up. Not all savings accounts are created equal. You want to park your emergency fund in a high-yield savings account. This type of account earns a higher interest rate than a traditional savings account. That means your money will grow faster. Shop around and compare interest rates from different banks and credit unions. Don't be afraid to switch institutions to get the best rate. Every penny counts. Remember, your emergency fund is for emergencies only. Don't be tempted to dip into it for a vacation or a new TV. Trimming the fat-cutting expenses without cramping your style. Saving money doesn't have to mean living a life of deprivation. It's about making smart choices and finding creative ways to cut expenses without sacrificing your lifestyle. Take a close look at your spending habits. Are there areas where you can cut back? Can you eat out less and cook more meals at home? Can you find a cheaper cell phone plan? Can you negotiate a lower rate on your car insurance? Look for small, everyday expenses that can be reduced or eliminated. You might be surprised at how much you can save by making a few simple changes. Unlocking hidden income. Finding extra cash for your fund. Boosting your income is another great way to accelerate your emergency fund savings. Look for opportunities to earn extra cash on the side. Could you pick up a part-time job? Could you sell items you no longer need online or at a consignment shop? Could you turn a hobby you enjoy into a side hustle? There are countless ways to earn extra money. Get creative and explore different options to find what works best for you. When life throws a curveball, using your emergency fund wisely. Remember, your emergency fund is for true emergencies. This means unexpected events that require immediate financial attention. A job loss, a medical emergency, or a major car repair would all qualify as legitimate reasons to tap into your emergency fund. However, a sale at your favorite store or a weekend getaway with friends do not constitute emergencies. Avoid dipping into your emergency fund for non-essential expenses. Section 8. Refilling the reservoir. Replenishing your fund after an emergency. If you do need to use your emergency fund, don't panic. It's natural to feel anxious, but remember, this fund is designed to be your safety net. It's there for a reason. It's meant to provide you with financial security during unexpected times. The important thing is to start replenishing it as soon as possible. Begin by assessing your current financial situation and identifying areas where you can make adjustments. Once the immediate crisis has passed, make it a priority to rebuild your emergency fund to its previous level. Adjust your budget, cut back on expenses, and look for opportunities to save more, or find ways to earn extra income to replenish your savings. This could mean taking on a side job, freelancing, or even selling items you no longer need. Think of your emergency fund as a reservoir. Just as a reservoir stores water for times of need, your emergency fund stores money for financial emergencies. It's there to provide a lifeline when you need it most. Knowing you have this safety net can bring peace of mind and reduce stress during difficult times. But just like a reservoir needs to be refilled after a drought, your emergency fund needs to be replenished after it's been used. This ensures you're prepared for future emergencies. Start by setting small, achievable goals for rebuilding your fund. Even small contributions can add up over time. Consider automating your savings to make the process easier. Automating your savings can help you stay consistent and disciplined. Set up automatic transfers from your checking account to your emergency fund. Celebrate small milestones along the way. Each step you take towards replenishing your fund is a step towards financial security. Remember, rebuilding your emergency fund is a journey. Stay committed, stay focused, and you'll be better prepared for whatever life throws your way. Section 9. Reaping the rewards. The benefits of financial stability. Building an emergency fund is one of the most important steps you can take to achieve financial stability. This fund acts as a financial buffer, providing you with the peace of mind that you can handle unexpected expenses without derailing your financial plans. It provides a safety net to protect you from unexpected financial setbacks. Whether it's a sudden medical expense, car repair, or job loss, having an emergency fund ensures that you won't have to rely on high-interest credit cards or loans to get by. But the benefits go beyond just having cash on hand for emergencies. Financial stability allows you to plan for the future with confidence. You can set long-term goals, such as buying a home, starting a business, or saving for retirement, knowing that you have a solid foundation to build upon. An emergency fund can also reduce financial stress, improve your credit score, and give you the freedom to pursue your financial goals. When you consistently save and manage your finances well, it reflects positively on your credit report, making it easier to secure loans and favorable interest rates. With financial stability, you can achieve significant milestones such as purchasing a home, taking a dream vacation, or investing in your education. These achievements not only enhance your quality of life but also provide a sense of accomplishment and security. When you know you have a financial cushion to fall back on, you can make decisions with greater confidence. This sense of security allows you to take calculated risks, such as investing in the stock market or starting a new venture, without the fear of financial ruin. You'll worry less about money and feel more in control of your finances. This control translates to better decision-making, as you're not constantly stressed about making ends meet. You can focus on what truly matters to you, whether it's spending time with loved ones, pursuing hobbies, or advancing your career. This can lead to reduced stress and anxiety, improving your overall well-being. Financial stability is not just about having money. It's about creating a life where you feel secure, content, and free to pursue your passions without the constant worry of financial instability. Section 10. The long game: patience and consistency in building your safety net. Building an emergency fund takes time and effort. There's no magic bullet or get-rich-quick scheme. It requires discipline, patience, and consistency. Don't get discouraged if you can't save a large amount of money right away. Start small and gradually increase your savings over time. Remember, even small contributions add up over time, especially when you're earning interest on your savings. The key is to be consistent and make saving a regular part of your budget. Section 11. Take control of your future. Start building your emergency fund today. Building an emergency fund is an essential step towards financial security and peace of mind. It's about taking control of your finances and being prepared for whatever life throws your way. Don't wait for an emergency to happen before you start saving. Start building your emergency fund today, even if it's just a few dollars a week. Your future self will thank you.